This is a portion of my portfolio where I'm buying cheap and waiting for the big money to come back in and float my stocks back up.
Bear gang till I die, ho. Swooped up the homies and we about to start a sideshow.
Let me give you guys an example of how oftentimes you'll see markets work in what we call a flat market. A flat market is generally when you zoom out on a market, okay, it looks like this, right? Now, if you zoom in, it looks like this, right? But we call it from zooming out, it's kind of like a flat market. Now, how do stocks go up and down and stay that way, right? Well, you get those rotations. Now, we've talked about rotations in the past, right? Money rotating from one sector to another. You know, if you're an institution or you're a big mover, you move your money into this sector, let other people buy it, sell it to those people, then that goes down, and now you're moving in your money into here, it's going up, and then you move out. So right now, if you guys remember, in October, remember, tech was getting killed, right? Tech was getting killed. So people moved out of tech and were moving into a different sector, right? Retail was doing good. I was up significantly on my Walmart calls. A lot of things were happening. Tech was getting killed. Well, let's call it pharma. We'll call it retail. Okay. All of a sudden, tech bounced back, right? Everybody jumped in, bought the money on the cheap and rode it back up. And we're seeing the same thing happen with retail right now. You're seeing Best Buy, you're seeing Gap, you're seeing Walmart, you're seeing Target, you're seeing LULU, you're seeing all of them go down. I got into LULU and it was killing it the first 2 days as a run up to earnings, but now they're all dying because money is moving out of this sector. Why is it moving out of the sector? Several reasons. One, profits were made, the money's moving to another sector, and more importantly, these are based off of the stimulus, right? No stimulus, nobody's buying shit online. Okay? No stimulus, no money to buy shit. So why keep your money in here after you've made profits when you're reluctant or relying on this? There's no reason to. Sell your profit here, move into another sector that's profitable. Semiconductors are profitable right now. Palantir, meme stocks are profitable. There's a lot of profit out there. So these are dying. Well, just like tech did in October, these are going to go down, but they're going to come back up. Does it take till the end of this month? Does it take till the new Congress? Does it take until the Georgia Senate race? We don't know. So what I'm doing is I'm buying little bits of retail on the way down. I don't know where the bottom is, but I'm not throwing all my money at once. I bought a little bit of Best Buy at $113.99. I bought a little bit more at $102.97. I'll buy more at $99. Gap, same thing. Walmart, Target, whatever. I'm buying on the way down so that when that stimulus news comes out, or when we get a new Congress, or there's vaccine news or whatever, and people believe that people are going to start buying and getting their jobs back, and that money rotates back in because now it's cheap. You made money on the way up. You sold, it goes down, you made money somewhere else, and now you're like, oh shit, this shit's cheap again. We go again, and they bring their money in. And so I want to be in cheap when that money flows back into that sector, it goes back up. Now I have more shares at a cheaper price, and I make more profit. That's my plan. The problem is, does this take 1 week, 1 month, 3 months? That's the question. And do you have the resolve and the liquidity to be able to weather that? So that's why I'm buying this. You're like, well, Stocky, you bought Best Buy, it went down. You bought more, it went down again. When are you just going to cut this as a loss? It's not a loss until I sell, number one, and number two, I'm not in this for the week. This is a portion of my portfolio where I'm buying cheap and waiting for the big money to come back in and float my stocks back up. The people who panic sell are the ones who always end up chasing plays and taking losses. So that's why I am in these and I'm just buying little bits. Every time it dips, I'll just buy a little more. I'll buy a little more. I'll buy a little more. I'm not putting 50% of my portfolio in any of these plays, but I'm buying a little bit more. I have 12 shares of Best Buy. I have 6 at $113.99. I have 6 at $102.97. 12 shares. It's not the end of the world. If it drops 99, I'll buy 3 to 6 more shares. So then when Best Buy goes back up to 115, my average price is 105. It's 10% on larger shares. Or if it goes to 120. You see what I'm saying? But I'm not trying to get rich off of this play. I just want to be in ahead of the money coming in. How did you know the money was going to come back to retail? I didn't know when. I just was expecting the same thing to happen. Remember when tech dipped? It's not over. I mean, this is one day, guys. Retail may not have money, may leave again at end of day today. We don't know. But remember when we had tech pull back in October and we saw it go into retail, or we saw it go into pharma, and then we saw it go back into tech? Because here's the thing. I want you to think about this for a second. I want you to pretend that you're a billionaire, okay? Or you have billions of dollars of someone else's money, and you make a profit for any profit you make those people, okay? Let's say you have $1 billion. Okay, you have $100 billion that you have in long-term equities and hedges and the whole 9 yards. You have $1 billion. Okay? Now, I want you to think money. How can I have enough money to move stocks. How do I make the most amount of money in the shortest amount of time? What I'm going to do is I'm going to look for a sector that's undervalued. Let's call it pharma. Okay? Pharma has dipped. I'm going to take my money and I'm going to buy it. That is going to start moving it up on volume because I bought a lot. That's going to bring other investors in who are then going to drive that price up, right? But for them to drive the price up, they got to take money out of something else, right? So while this is going up, the inverse is happening on tech. Okay? So they're dumping their money out of it to move into this fast-growing sector. Well, I'm in here. These guys brought this money. I'm going to sell here. Okay? Oh, look. Looking tasty. I'm going to buy here. Well, guess what? Rinse and repeat. Sector over sector over sector. Now, this isn't everybody. This isn't the JP Morgan. This isn't the Fed. This isn't Warren Buffett. I'm just talking about how some of these institutions will make money. It's called buying the dip, okay? In this case, it's cycling through, okay? And money's going to move from one to another. You always want to be in there before everybody else is. My idea is hopefully I'm correct about retail, and I was buying on the way down, and I'm hoping that money moves in, it gets driven out, and I can also get out for a profit. That is what I am looking to do, okay? Now, is the money moving into retail right now? I don't know. We saw it do it into tech. It's going to come back into retail eventually. It may be today. It may be next week. It may be in March when we have a big stimulus. I don't know. But if it keeps dipping, I'll continue to buy on the way down because that money will eventually have to come back into that sector, and I want my ass sitting on a throne of shares when that throne goes to the moon. Can I be real with you though? I'm about to shit on myself, and I'm willing to do that in order to shit on all the scammers out there, okay? The past 7 months, anybody could have made money in the market. You could have bought almost anything since March or April and been up significantly, whether it's equities, whether it's options. Whatever someone made in the last 6 to 8 months means jack shit when it comes to their ability to trade. I'm going to repeat that. Yeah, there's some people that have made more than others, whatever like that. From March until October, September, was the greatest bull run stretch in the history of the world. Okay? Please do not take someone's record over the last few months as a hey, they did it, I'm gonna do whatever. I'm not discrediting people. There are people that still manage to lose money in that time frame. However, I just want to make it clear that it has been a bull market. Now, are there abilities to outperform everyone else? Sure. That takes a lot of knowing when to get in, when to get out, what to look for, what is the move and the momentum. But I just have to be real with you guys. I've promised you guys from day one that I'm going to be, real with you guys. And that a lot of people have made a lot of money. And that's great. But don't expect it to always continue, especially for people who are new to this. So for those of you guys who are in this and saying, oh my God, I'm the best trader in the world, I'm up 30% already this year, that's good. But understand that that's not normal. And there will come a time when the market either pulls back or flatlines or slowly creeps up. And it's going to take a lot more for you to beat the average market return. That's all I got to say. Now, I'm not trying to discourage you to continue investing. I want you to invest. What I always tell people is I want you to have realistic expectations. And when you're in a bearish market, you guys are really going to have to either buckle down and get through it or learn how to day trade. And when I say learn how to day trade, for those of you guys that really want to, that are have the ability to do it, you're going to have to be in and out quickly, okay? Because you're going to see a lot of these. I remember 2009, 2010, there was a lot of days where you saw this. Okay?